Hello and welcome to the Weekend Investing Daily Byte of 11th of June and a dull day today. But the good news from yesterday is that there is continuity of governance. Most of the ministries, most of the portfolios have been distributed to the same people. I was myself expecting some juggling in the finance ministry, but that has not come through. Uh, and we have Madam Sitaraman back as FM. Now, what does that do? It brings on the table again the rhetoric that was on at the time of last budget, that there have been some internal discussions, studies that other asset classes should be brought, uh, equity should be brought at par with other asset classes, not the other asset classes coming towards equity, but equity going towards that. So people last year were reading, last time were reading it as potential of long-term capital gain, which currently has a 12-month cap, to become a 3-year cap. So, uh, I mean, of course, all this is just speculation. There is no confirmation or any insider information uh, of any material evidence. But one thing is for sure, that we need to see ourselves from somebody else's perspective. So while we in the market will may feel that we are paying STT also, we are paying short-term capital gains or business income on FNO. Multiple taxations are there. SEBI charges its own fees, exchange charges its own transaction cost, so on and so forth. But from an outsider's perspective, like a finance secretary had last 3-4 years back had said, that stock market people just make money sitting doing nothing. So that is the sort of bureaucrats view of the market, that these guys are there and they, especially in the last 3-4 years since COVID, everything is flying away to the roof. These guys have made a lot of money, so they should not be given any special you know status in terms of taxation. Why should a stock market investor pay 10% capital gains after 1 year versus, let's say, somebody who's invested in real estate or somebody who's invested in gold or somebody who may have invested in art? So this special status of equity market uh, has gradually gone diluted. I remember when Mr. P. Chidambaram was the FM, there he introduced the securities transaction tax, and long-term capital gain was applicable in those days. So long-term capital gain was set to zero, and it was said that instead of this long-term capital gain, we are bringing in the STT. That was the underlying thesis at that point of time, and it was long back, I think 2004, if I'm not mistaken, 4, 5. Uh, then what happened gradually? STT was also set offable against business income. So if you made money in options trading, for instance, you could take an expense of STT, for instance. Gradually, that was taken away, so that STT is no longer can be taken as an expense in your business proposition. That was taken away, gradually diluted. Then STT was gradually increased in several steps. STT was increased to the current level, and then long-term capital gains was also brought back without removal of STT. So while this happened over different governments, but the intent of STT was only to the extent that at the time of transaction, the government should know a transaction has happened, and hence a small part of that transaction has gone into a transaction code, and so it helps in tracking. That was the only purpose of STT. Now it has become a profit center in itself, that STT should come at 20-30,000 crores per year. So unless the government really sees this in a rational manner, I don't think we are reversing this trend of additional taxation. And if my fears were to come right, then you know even if STT is not touched, increased. LTCG probably either the rate can get increased or the period which is required to claim STCG can increase. And of course, the short-term capital gain can also be tinkered with. There were last year rumors that STCG can be removed and can be merged with the income slab, which will be extremely harsh, I would think. So I think the government, because it is in continuity, has dashed some of my hopes that a fresh view can be taken. I also feel, and this is beyond the current topic, but the personal income tax collection and the entire department needs to be scrapped. 97.5% people don't pay income tax, direct income tax. 2.5% people pay income tax. And while government has made it slightly liberal that 7 lakhs or something, no tax is payable, we still don't get much tax. So there is a whole army of income tax officers going after 2% people. Uh, and if that army was let loose on indirect tax, you know, uh, gaps being plugged, I think they may do a much better job there. Anyhow, but this is a discussion for another day. So this is my take and fear on capital gains, and I think the focus will very quickly shift to this topic now. I think the market has done whatever it needs to do from the elections perspective, that is behind us, and the story that will now play out from here till I think the 1st of July is when the budget should be, is on these rumors or these speculations. Where is the market headed? The market is recovered back the entire fall, but is now dithering to go forward. So maybe some more time of consolidation is needed. Nifty was absolutely flat. It was up in the morning during the day, but gave up most of the gains. So the strength to really take it on from here needs some push, and for that we need some trigger or some news, uh, and that's where we are. Nifty Junior is also absolutely flat, minus 0.09%. It can't get flatter than that. Uh, Mid caps slightly in the green. Mid caps probably were the ones, mid and small caps, which were the ones which were still leading the market, made a new high for the day. So from that perspective, uh, mid caps and the second part, the second half of the market, if you may call, uh, has done reasonably better. 0.6% also on the small cap index. So we are seeing that this entire resistance is nicely taken out. Maybe there will be a retracement to check support and then go up, but it looks like we have broken out from here. Nifty Bank Index is not really going up. I mean, this was a sort of a false breakout that happened on exit polls. Beyond that, it has not been able to take out even its May high. So, Nifty Bank is still dithering against in this particular um, period, and it needs new momentum to really make sure it goes up. I think above 50,000, 50,000 round figure always are sort of resistance points, and that's what exactly that is happening. FIIs, uh, at least in the last two sessions, have been on a buying spree. So 2,500 crores. I think previous to that it was 4,000 crores. It's a good sign that both FIIs and DIIs are buying, although that is usually never the case. They often have opposing positions. Very dull Nifty heat map. You can see just two blocks of green here. ONGC racing at 5.5%. L&T up 1.5%, some gains in autos, but totally flat banking, totally flat FMCG, totally flat, energy, and there was not much to talk about today. Even the Nifty Next 50, which is usually more trending than Nifty 50, you saw more red here today. So Chola Finance, ICICI, General Insurance, DMart, Indigo, Adani Green, Havells, Motherson, Marico, Dabur, they all lost some ground. Gas Authority of India, IRFC, LIC, Siemens, HAL, BAL, they gained a little bit today. Within the sectoral trends, public sector enterprise stocks again were leading the market at 1.3%. Real estate was again leading the market at 1.1%. Autos gaining 0.8%. So in this last 1 week, you have seen real estate do really well, 11.4%. You have seen 10.6% on public sector enterprise and 9% on metals. Metals today were totally flat, but for the week gone by, they have done a good job. Overall, real estate has done fantastic job over 1 week, 1 month, 3 months, and even 12 months. The best performing sector actually this far. Today, the defensives were extremely defensive. FMCG, pharma, both down 0.3 and 0.4%. IT totally flat. So there was no real kick in the markets today in any one direction. Public sector enterprise stocks still managing a creeping up at 1.32% right here, and the public sector enterprise stocks which had broken out of this 14-year consolidation continue to move up. So whenever you will find there is a 15-year, 10-year, 7-year kind of consolidation in a range, you will find that the range breakout is going to be huge, and that's what exactly has happened right here as well. Oil and gas index is looking good, although it is not yet at a new high, but it has recovered very well from this fall. And there is more and more talk of Saudi Arabia sort of joining the BRICS party, and the US petrodollar being in danger. Although a lot of this is very slow moving, it happens over decades, and there were some news item, I don't know whether factually correct or not, that the 50-year contract between the US and Saudi Arabia on the petrodollar exchange of oil for only US dollars, that contract is over, but I don't know if that is correct or not. But Russia and China, of course, are now dealing in a lot of non-US dollar transactions. Oil and gas index also had broken out after a long consolidation, and again it is consolidating here and may have continuation above 12,000 right here. So oil and gas can be seen for a prospect of any setups if you have. In terms of spotlight, ONGC, as I mentioned, up 5.5%, looking good to go retest this particular resistance. You also had Hindustan Construction moving extremely rapidly from recent bottom at 31, already at 47, breaking out to a new high. I remember the stock was languishing at, I think, single digits, and nobody was touching it. But now there are upgrades on the stock, and the stock seems to be, having a rebirth of some sorts. If you see the very long-term trend from 2008 till 2020, 12 years it took for the HCC stock to bottom out from 110 rupees down to 3 rupees, and from 3 rupees we are now at 47. It is somewhat like the Suzlon story of restructuring, but you never know how many skeletons are there in the cupboard. So if you have strict stops, strict ways in which you will protect your position, definitely a stock that is making a almost a 12-year high is certainly worth looking at. If you are a discretionary trader, definitely you must look at such stocks. Gold has been down and out since 8th or 9th of this month. Um, I think there's a lot of data that is about to come out from the US this week. The interest rates that were earlier 5 cuts this year, then it became 3 cuts this year, then it became 2 cuts this year. Now people are talking about that there will be no rate cut, and only one sort of rate cut may happen just before the US election for the sake of calling it a rate cut year. So the excitement at gold is diminished right now. Let's see how it goes from here. But the level at 71,000 is still quite respectful, given that we were at 63, 64 just few months ago. So thank you so much for watching the Daily Byte. Please do like this video. Do comment in the comment below what you liked, what you didn't like. It helps us to improve the format of this daily presentation, and do give your comments on the various things that we've discussed on the income tax, on STT, and what is your expectation from Madam Finance Minister. Thank you. Bye.